Hey, everybody. Welcome to the Mid-Curve podcast. We're back. Your favorite four people are here. We're talking. We got a really active, a very weird and active day in the world of definitely not NFTs, but in the world of crypto at large. Everybody, quickly introduce yourself and give the 10-second version of your bio. I will start. My name is Funky Donk. I come from the media world, and I somehow lucked into making some money on a shitcoin finally. Grant, what about you?
Hi, my name is Grant. I come from the traditional consulting world, and this week I made my first winning trade in 2 years by following the advice of my good friend Fonky.
Here we go. All right, Eric, what about you?
Hey guys, this is Eric, former TradFi weirdo, now full-time Web3 weirdo. I have also made money on a shitcoin for the first time in a long time after aping into a shitcoin on Funky's recommendation. So thanks, Funky.
Yeah, great. Salty, what about you?
I'm salty. For the first time in weeks last night, I went to bed at a reasonable hour and didn't check out Discord and stuff, and so I missed making money that everybody else made on Fonky's advice. I'm a DeFi person, I guess. No Emmys here, just some research papers. Back to you, Emmy award-winning Fonk.
Let's jump in with what is happening and why everybody thinks that I helped make the money, because I really didn't, other than I just saw something that continued down a long pathway, which is we are 100% in shitcoin season. The token that people are talking about, which is one that came out yesterday, has been really interesting to watch, but more as an example of things that have been happening in the space. Like, this token is called Turbo. It's a token that a friend of mine, Brian Brinkman, had talked about, and it was actually a really interesting backstory. A guy, an NFT artist, created a token entirely with ChatGPT, meaning that he asked ChatGPT what the idea should be, what the name of the token should be, how to do the contracts, how to do the everything, and then shot it. It took off. It took off, and it now is doing very well. I think actually this is a bigger conversation here because we're coming off the heels of Pepe hitting a 500 million market cap, I think, at the top, and now it's a little below that. I think it's closer to 400, but like, we are deep in the throes of shitcoin season. And I want to ask everybody on the panel, what drives a shitcoin season? Because this is, I think, the second one and maybe the third one I've been through. I don't really count DeFi Summer because I kind of was half in and half out of the world at that time. But when you see a shitcoin season going, what is driving this? Because I think everybody at large would kind of feel like, oh, the fucking market has been so bad. Why is this happening now? I don't know. Eric, do you have a take on that? Like, why shitcoin seasons happen?
Yeah, boredom.
Yeah.
Just
Yeah.
like this. I think obviously this year has been a year where crypto, broadly speaking, recovered off the lows. We've had several really high-profile and pretty lucrative airdrops.
Yeah.
Right. And now there's nothing. And so we're all kind of stuck in this sort of deep existential ennui in the midst of like a range-bound market. And everyone's bored. So, this is the perfect time for shitcoin season. I think like it kind of, looking back like last year, it kind of sort of reminds me of when Goblin Town took off, because the conditions were were very similar, where you just had this really bad bear market, nothing was working, and then you had people that did something mysterious, meme worthy, that was well executed, and all of a sudden it caught fire, and right, like everything went vertical. Kind of reminds me of that, except when you do shitcoins, the participation pool is a lot larger than NFTs.
Yeah. There's a lot more people who can play with it. Grant, you say you hit on one of these, but like, have you participated in shitcoin season before, or have you mostly kind of bowed out of it? Like, what's your history in shitcoins?
I have a terrible track record with them. I think the last time I experienced this was November, like year-end 2021-ish. Like, we just seen like a huge local top off of, the the institutions aping to generative art and punks, and then kind of the first wave of the Bored Apes and the Cyberkongs and the anonymized peaking. Some of them forever, some of them not so much. And then you just saw a whole bunch of money flow into GM and a plethora of others I can't be bothered to name because I never took part in it. I just sat idle in my JPEG bags while they sat stagnant or died, essentially. And those were the worst of times, right? Because the entire ETH1 was basically held hostage because of the high gas fees, and we're kind of encountering that this month and today, except it's seemingly almost like a lot of the people who are battle hardened and have been through like this past cycle don't care anymore. Like I get 0.03 ETH to execute a transaction is just normal. Like no one even bats an eye anymore, and I kind of find that jarring. Obviously that gives way to other conversations about L2s and even L3s and whatnot. But yeah, my experience is pretty limited. I think it's just Eric's nailed it on the head, right? It's just malaise and boredom with whatever the current meta is, which I think still continues to be entertainment via JPEGs. And then people just find a way to pivot.
Yeah, that makes a lot of sense. It's interesting to think about. I had almost forgotten about GM because I also was in the same place you were, sitting very excited about my bags that had gone up through September and then wondering what was going on as ETH was going up. It was a very shocking time. Salty, what about you? Do you have you're somebody who spent more time in the DeFi markets. Do you have a take on shitcoins at writ large, or is there something specific about this time that makes them pump up?
I do. I do think maybe I would resist a little on the it's sheer boredom. It's definitely boredom, but I do think it's not like a silver lining, but there's something to be said for it's permissionless finance. You can buy whatever you want from wherever you want and trade it with whomever you want. And that will manifest itself in ways that include abject degeneracy. And it's good to remember that a huge amount of these things, really just by number, are just truly out and outright scams. And that's we can never forget the pain of permissionlessness. And maybe most people aren't cut out for permissionlessness. I don't know, because a lot of people are losing money in scams still, and then a lot of people are following other people into these coins and losing money. So there's this thing of boredom, but also the amount of money people are losing. I think it can't just be boredom. It's also a sign of I don't know, desperation or hope. People are not, who's getting ahead in the world that doesn't already own assets and can trade and you need money to make money. So I think there's this sense of I have no idea how I would feel if I didn't own crypto. I try to put my head space in the mind of total normie, owns no crypto, maybe owns some stocks, and they look at the world and the economic thing around them, and I would be oh my God, what do I invest in? What do I do? This is why people go crazy buying metals or whatever, Forex scam trading stuff is getting shilled on, sidebar ads in the Wall Street Journal website. I think there is this, I guess I would call it desperation, flavored with the doors are wide open because it's ETH, baby. You can do whatever you want. You don't have to ask permission.
That should be the slogan. It's ETH, baby. You can do whatever you want.
That's what Vitalik said when he dropped ETH. Yeah,
exactly. Of course. One of the things I will say I think is interesting about Turbo, to your point about everything being a scam, and by the way, even today there's been a couple near scam shitcoins that have blown up into dumb shit. One of the things that is interesting to me about Turbo, and really why I actually bought in pretty early because I thought it was kind of interesting, is watching somebody do it in public and kind of being very open about who they were. The Pepe devs, we don't really know a lot about who made Pepe. We know that people like Ryder and Polly were shilling it early, but we don't really have an understanding of who made it. And there was some funkiness going on with wallets. I don't know, there is an interesting story around Turbo, which is just oh, it's this person. They did this thing. They kind of created this thing and they were kind of open and upfront about it. But I think the bigger question here is, okay, I actually have a question for the smarter people in the room, which is all three of you. Is this there always is that kind of story that ETH, when Bitcoin goes up and then ETH goes up, and we had a little bit of a rise. Obviously, we're now kind of sitting around the 1850 to 1950 range in ETH. Is this the funnel down? Is shitcoins part of the funnel, or do you see this as something else? Did we not have enough of a rise to make a funnel pour off where the funnel works, or is that kind of funnel model which is like, Bitcoin, ETH, alts, shitcoins, maybe NFTs. Is that funnel model kind of not work in a bear market? Does anybody have a thought on that?
Please stop saying funnel. My
It was very unclear what you meant too. Oh, I did want to. This was the second part, Fonky, about what you were asking that I wanted to talk about too. And this is good. Not using the F word. Is where do meme seasons happen in these types of cycles?
Yes.
Like we have. And so I don't know about flow. Looking at flow is also an interesting like lens, but I'm just looking at it in like chronological order. Like you look at like the ICO and initial Bitcoin rips, and then you look at like 2021 DeFi summer NFT rips, and then you look at how soon are we ending this cycle and going to the next one. And of course, these the lines of when a cycle starts and stops. Well, they're sometimes arbitrary, but sometimes it's a 1 week period where Bitcoin just goes insane. So people monitor Bitcoin to track where we are in a quote unquote cycle. But I do think it's very worth talking about what do meme seasons indicate about where we are in a cycle. And then also, is this another fake out meme season? Because I feel like what was it, like a month ago or 2 months ago, we had another one of these like super short-lived meme seasons. Like it was like just a couple days.
Yeah, that sounds right. Although I don't remember what was driving it. Was this in the AI tokens? Because there was that period of time where it was like in February maybe, and like I remember Eddie his Kongs like was shilling his AI tokens, and there was an AI like Botto went up way high. Like, was it that? Is that what you're talking about?
On this show we talked about meme coins. I feel like 2 or 3 months ago because we were like, it was this like 1 week season. I'm gonna figure out what it was and what the big tokens were, and we're all gonna go, oh. But yeah, y'all.
Yeah. I don't know, Grant. What about you? Do you have a thought on that? Is there any sort of sensibility or any sort of reason to this F word?
No, I think I think the gents here have said what's needed to be said. We're in the waiting room, right? Before whatever happens next happens, and I personally believe it's the start of a new cycle following a tiny bit more capitulation and pain in traditional markets. We're kind of seeing that with some tier 3 banks and whatnot recently. Corporate real estate's our initial cracks as well, and and this liquid little casino that obviously added a tremendous new meme. Well, not new meme, but new meme coin to the realm. It's just survive. That's the only mission right now.
Yep. Okay, that's fair.
That's what's weird about, like you said, it's a new meme. Like what I don't get is, there must be some coordination because like there's been a million tokens named Pepe in the past, right?
Yeah.
This is not even remotely the first thing called Pepe with the frog on it. It's a token, just as its own token.
I think that's another thing that was so interesting to me about the Pepe jump up is that it felt very like, oh, now we're going to do a Pepe token after the 30 other Pepe tokens that didn't work. And suddenly now's the time. That's why it did feel like, okay, something's going on. But let's transition. I actually think, Grant, your conversation about the traditional markets is pretty fascinating. Obviously on tomorrow, right, we have FOMC. By the way, do I say FOMC or do I say FOMC? I don't mind. I don't mind FOMC, but I don't think that's what you probably say, right? It's FOMC.
Someone tell the man. I don't know.
I'll assume it's FOMC then. Let's assume. Eric knows. He just wanted to leave me hanging. Don't, Eric? What is it?
You can say FOMC.
Okay, fair enough. That's fine. So tell me, Eric, what is the expectation tomorrow, and do we feel like this is going to move the crypto market significantly?
Yeah, I think 25 basis points is all about locked in. The expectation is that they're gonna announce this one last increase. I say we're gonna wait and see. And if you look at sort of the former forward estimates, by some people are basically speculating by like around summertime, you're gonna start announcing cuts.
Mm-hmm.
And I think like some of the smarter people within the TradFi space have basically been saying like, well, that seems really premature because relatively speaking, the economy is still running really hot. Inflation is pretty sticky. And so what is sort of the incentive to cut this early? and the pushback there is like, well, the banking system is kind of falling apart at the seams. Right, and so obviously on Monday, the FDIC seized First Republic, and then the assets were then sold to JP Morgan Chase. Today, like you've seen other regional banks like PacWest basically limit down in trading, since like people are looking at this and think, well, those guys are next, right? And it's kind of just this one of these situations where these regional banks that really didn't have much of a business model were able to survive and build a business in a low interest rate environment because they kind of went off the traditional banking route, and started pushing into riskier businesses. In a tightening environment, that's all come due, and ultimately, like at the fringes, the weak ones are going to get shaken out, right? I don't. My personal view is that this is not super existential. Like, we as a society, as the economy, we can exist without regional banks. And nobody has lost money on deposits yet. But I think the broader view is that the longer that this goes on, the more pressure there will be to kind of take the gas pedal off on rates, because nothing in sort of the current financial system works in a high rate environment.
Right. And I think also we're entering a world where it looks like we're finally going to get a recession of some in name, I guess, which I think people have been expecting for a while. And it also looks like the job market might actually be finally slowing after. I mean, God, it's like the amount of job cuts that have come across the board is really interesting. Actually, I just recorded for my other podcast, plug AI for Humans, IBM just announced, I don't know if you all saw this, that IBM announced 7,500 job cuts that they're saying are due to AI that they may or may not replace, which is an interesting thing. It's another narrative, right? Obviously, Facebook and Google and all those companies have been cutting jobs based on the idea that like we've been overstaffed, and it's a way for them to show profits by cutting people rather than trying to make more money. But like, we're definitely going to be entering a period of time when you add in what this impact of AI is going to have, where I have a feeling we're going to see jobs go down relatively fast. So it'll be an interesting thing to see how that affects the economy at large. Again, this is, liberal arts major Funky here talking about this, but I think I'm looking at that idea of what will jobs look like, during this next financial run? Will jobs, will we start to see unemployment go up? And whether or not that affects the market, it's going to be really interesting. I don't know. Have you guys thought about this at all? Like, I've thought a lot about the idea that there's going to be like conceivably enormous wealth made from what's happening in AI. But I'm really interested to think about if it transitions at all back to like positions and hiring positions, because I think probably not. I don't know. This is more of like a weird existential question, but do any of you have a thought on like the economy at large? That's essentially if there's 20% of people unemployed or 25% of people unemployed.
Yeah, that's social unrest.
I know, it's kind of scary to think about, right? Like, it's like
you've seen what societies look like in situations where like there's 25% unemployment, right? And generally, one of the main powder kegs for political instability is a bunch of itinerant young men with nothing to do and no future prospects.
Yes. So this is one thing I think we don't have to go deep on this, but it is something that I've been thinking a lot about lately. And, you can project out a thing that may or may not happen, but like it does look like from a purely financial standpoint, the markets will probably do very well. Conceivably, they'll come back very strong because there's a possibility that this will open up really big amounts of like income possibility or capital possibilities that can be made, but it might mean less people employed. So that's your that's your bad feeling for the week takeaway.
I do think it's worth considering. Actually, I don't know if we want to jump off this or do this later, but this actually ties into it's worth considering that, yeah, like probably what you said about 20% unemployment, that type of thing. There's no way we don't get there eventually. You
Yeah.
have to make your own positional bet on whether that will be in the next year or decade. But and then as Eric said, that is social unrest. So it's like you have to make that transition because the era of productive employment being necessary for every person has been ending for years now, for a long time.
Yep.
Imagine how many people send 3 emails and do 4 Zoom meetings a week, and that's their job. I mean, people have written books about this, blah, blah, blah. But, like, that era is gonna accelerate, and then it's like, how bad do we fumble the bag? 'Cause it's possible we don't fumble it, and, everyone in government doesn't want social unrest because they'll be, like, dead. So, everyone has the same kind of goal in that sense of ultimately, like, we don't want, like, Mad Max post-apocalypse, but, it's up to us and then the people we elect not to fumble that, and it could be fumbled in many ways.
Yeah.
This ties into I don't know if y'all saw, Balaji, paid off his $1,000,000 bet.
Oh, he did. What does that mean? He paid it off early? He
Yeah.
decided he wasn't going to be right?
Yeah, he didn't, like, wait the whole time. I think he paid more than he bet too. He paid 1.5 million to some different charities and the Bitcoin Core Foundation. And then he put out this video, which was, so crafted for Balaji. Like, he had all these little one-liner quotes in it. But, I mean, it was some of the most incredible, like, doom bear porn, like, ever. I mean, just, like I don't know, I didn't check all of his numbers, the things I know about off the top of my head. I was like, well, he's not wrong. Um, either of y'all, Grant or Eric, did y'all see the video he put out?
I haven't checked it out yet, but you know what's funny is that his short dollar call is now in very, very good company because I don't know how, like, Stan Druckenmiller recently in an interview said shorting the dollar is one of his highest conviction trades.
Oh,
Wow.
yeah,
And
yeah, yeah.
if you look into Druckenmiller's argument, basically it's the Fed, the U.S. banking crisis means that the Fed has to backdoor expand its balance sheet. Government spending is going to run out of control, which basically means further debasement of the U.S. currency. And so you're going to be stuck in this situation where the dollar devalues and you still have relatively sticky inflation and equities fucking suck. And so like if you lay it out that way, like you literally superimpose that same argument over what Balaji has said, and people reading it will be saying, well, like seems like Balaji, right? So his as I think like some of what he says is a flair for there's obviously like some flair in exaggeration because you want to captivate people, but directionally like he's not like just this crazy dude out on the fringe like yelling about stuff with a tinfoil hat on that nobody cares about anymore. Like this is I think like starting to become a bigger focus. And sort of all of this happening in conjunction with like AI basically displacing potentially like tens of millions of people within the workforce is going to be setting up for some really scary dynamics.
Yeah, I think it's pretty fascinating. Grant, did you have a thought on that?
No, like all these 200 IQ geniuses can be right, but just keep in mind, the time frame is like 2 to 3 to 5 years, right? Like,
Yeah.
the world can end tomorrow, but probably not because of the debasement of the U.S. dollar and because 100 years of hegemony gets unwound overnight, right?
Yeah. It's interesting that the 2 to 5 year, it's funny how it used to be that like long-term thinking used to be like, oh, 20 to 30 years from now we'll have this. And now it's so funny to think like 5 years is long-term, right? Like it feels like we're in a completely different world now. It's like 5 years from now, who the fuck is know what's going on with AI? Like, if AI can continue to grow, like there's a world where we have an AGI within a couple years and then like all bets are off and it's kind of crazy.
Yeah, and it's not only technology, but it's just like how it's regulated and how governments treat it, right?
Yeah.
Because I mean,
yeah.
if social media or crypto is any indication, like they're gonna
They're gonna fuck it up.
They're gonna fumble the bag 100%, right?
Yeah.
They're gonna restrict it too much and then let it too loose and then cause social unrest, and it just goes round and round in a circle, right?
Yeah. It's interesting. Something I've been thinking a lot about lately is the idea of what it means to, when we talk about work and we talk about these markets, even like I think there's going to be a lot more people who insult to your point about like owning crypto. Like in part, people are going to have to start kind of looking out for themselves a little bit more than they used to. And I don't know if the world at large is ready for that. And like, even for me, like, it's like one of the things that's been so fascinating for me is coming out of the media world, and we're at a pretty steady, like, job that I would go to every day, a TV show that was on, like, and I've chosen to kind of have a different life now, but like, that world in the media world is going away, right? Like the idea that like a regular kind of job you go to, and I think everybody's starting to think, okay, well, what is my kind of like career that I'm going to put together? And it's a very different experience, going into a world. I think about my kids a lot, and Salty, I know you have kids too, but like what their life is going to be like, and kind of like what their career would look like what they will even do is a really interesting kind of conversation point. And I think all this ties into the dollar and to the economy, because like it's not, if you have to like struggle and toil just to kind of get by, which is, by the way, a lot of the way people live right now, which sucks, but like it's coming kind of for the middle and the middle upper class. Like I think it's gonna be it's gonna be weird. It's definitely gonna feel like a weird time.
Yeah, I think the drunken Miller bet thing is interesting too, and the dollar short, like in the near term, 2 to 5 year time frames, maybe 5 to 10 year time frames. One thing Balaji said that I was like, dang, I'm actually going to remember that even if I don't try to, was that when you're trading, being early is indistinguishable from being wrong. Same thing if you're like VC investing often. But
Mm,
if you're preparing for the future, being early is fine as long as your preparations aren't like costing you and like, messing your life up. And I was like, that's a really good point. Like
mm,
preparing yourself for directionality doesn't have to kill you the way if you were early on a trade, that would kill you.
right,
Well, It's
right.
it's I hope people think about these things. Like I don't know what people do. They see banks failing, and then somebody gets on the horn and says, "Don't worry, everything's fine," and they just go, "Oh, phew! I thought I should be worried." Anyway, back to work. Like
Yeah.
do people believe it? Like in 2008, up until the crisis, they're just saying everything's fine, everything's fine, everything's fine. And then everybody writes these books years later. It's like, hey, just so you know, back then I thought these bad things were going to happen. It's like,
By the way, the interesting thing I will say is, I think the interesting thing about the bank failure of the First National Bank that happened today, it didn't get covered at all. Like there was so little coverage of it. I mean, I shouldn't say at all. Like there was coverage of it, but like if you compare it to what happened to Silicon Valley Bank, like it was just swept under the rug. Like there's just an assumption now that it's going to be fine because they came in and they swept the last one. I mean, that's a little scary, right? Like I think we talked a little bit about the First National Bank failure, but like that idea that, oh, we lost another giant bank and like it wasn't really a news story kind of freaked me out today, because I was like, well, this is, to your point, Salty, it's just like this is the cycles of stuff, and now we're just used to that. We're used to the idea that a bank will fail, and it now doesn't, nobody gives a shit. I don't know, Eric, does that seem that way? It's like, do you feel like that when a news story happens, it just kind of sweeps away now and we don't even think about it, but if the next domino falls?
Yeah, I mean, I think we are somewhat inured to these bank failures now, just because it's been Silicon Valley so oversaturated everyone.
Yeah.
But the First Republic thing has been, I wouldn't say it has been like, undercover. It's been something that's been actively been talked about in on financial media, within the news for a while. But I think the reason that, you didn't feel it accelerate into like a crescendo the way that Silicon Valley Bank did was because this was a slow rug. Silicon Valley
Right.
Bank was the
Interesting.
fast rug,
Okay.
right? And that I say fast slow rug because FRC was already kind of walking wounded ever since Silicon Valley happened. And that, as soon as SVB happened, you already saw deposit flow out of FRC. You saw the like bank run. The major banks came in to try to support it by basically lending it money to prop up its balance sheet. But that just didn't work, and so it FRC bled out, and the regulators had to seize it. Um, so I think I still think like for like regular people this is scary and top of mind.
Yeah.
Whereas for like crypto people, it's kind of a little different because we've been like relatively speaking much more indoctrinated in the idea of like decentralized sovereignty. And so when this stuff comes, like it's like, I feel like for a lot of people, like the switch already naturally clicks in their head, and they're like, oh yeah, like more banks are gonna fail, right? Which is the right assessment. And that's what's happening. But I also think it's also because we are kind of living in a segregated little bubble where like magic internet coins named Pepe can be like worth $500 million, virtually out of thin air. And I think like those are just not dynamics that necessarily like exist in regular
anywhere
life.
in reality.
Yeah.
I mean, this goes back to what I was saying before too about that idea that like the crypto reality we live in is something can go from 0 to 500 million market cap in 2.5 weeks, and maybe the real world is just going to start to feel a lot more like that, which is such a weird experience to think about. It's like, oh, okay, well maybe financial markets are going to start looking like this, and like I don't know, do you guys ever think of that? The people who are, I think sometimes like the cryptoification of like the stock market, is that something that has happened, will happen? Like, is that something that like is a thing that people think about? Like, is it changed the way people trade stocks? This is more of a very general question, so I'm sorry if this feels like something kind of like overarching. But I've always been, now that I've been trading for a couple of years and been very exposed to the space, has any of this seeped back into the real world? Do you guys think?
Well, how much of Tesla's market cap is based on its actual revenue and profitability?
Yeah, no, that's a good point. I think that's actually a perfect point. Like, clearly, that's a huge part of what we've seen in this space, and that plus the GME stuff. Okay, that makes a lot of sense. I think you're right.
Wait, which way are you talking about the stock marketification? Because like, are you talking about looking at cryptos as stocks? Or are you talking about like?
No, I'm talking about the way that people trade crypto and the price action that happens in crypto, seeing it kind of play out in the real world. And I think, I think Grant's very right. Is that like Tesla? And I'm sure people have made that point now that you say that, Grant. But like that's a very clear understanding of how it's directly affected. I just wonder if it's going to more mainstream more after this point, even.
I think this is why a lot of people, even like people a bit older than us end up in crypto, is like, because if you're really being critical and trying to be a value investor in the stock market right now, you're just like, what the hell are you going to invest in? Well, look at the P to E's of all these companies. I mean, it's just like, what are you going to do?
Yeah.
I don't know, man.
Exactly.
Buy some Curve and take some swap fees. I hope.
Oh my God. Okay, well, we should probably wrap up soonish here.
Wait, is there anything happening in the NFT world?
Well, I was just gonna get into. Not really, right? That's the hardest thing.
We got to talk about Blend.
Oh my God. Oh my God. I completely forgot. By the way, this is like, clearly my brain is on turbo all day long. But yes, we have to talk about Blend because I want to talk about this because so just to set the stage here, Blend got dropped yesterday. And Blend is Blur's new lending program, which I will let either Grant or Eric go into more detail. But the thing I wanted to point out is that we all kind of hopped into the Midcurve Discord voice chat yesterday when it happened. And it was interesting to be in the room with a bunch of people trying to figure out the best way to play this. And I will say, after spending a day with it and kind of learning more about it, and I definitely didn't play with it myself, I'm still 100% convinced. Not that I think Blur's smart. I think they're doing the right thing. I think NFTs need to be financialized, and this gives giant ability to put more liquidity, and more liquidity will come in. I still think we're going to see a world where there are going to be a ton of people in the NFT space who get wrecked who don't understand what this means. And I think floors are going to go down after a small pump up. That is my take on it. But I also want to turn it over to Grant. Do you want to give a thought on it? I know Grant also is an advisor for Blur. What is your take on how this played out in the marketplace yesterday and going forward?
Probably too early to tell. Don't really need to make a prognostication, but yeah, I think, generally speaking, if an industry wants to grow up, they need complex derivatives to come in and help scale it, right? And I think we had this discussion already yesterday, Ponky, but like I don't believe a protocol should stop building and shipping and releasing products just because it's a bear market, right? Like that's not how that shit works, right? If that's how things were to work, we would, still be under the thumb of OpenSea, where they can barely keep the lights on despite taking in whatever it was, like $800 million or something during the bull market, and delivered absolutely nothing to retail, right? It's I wouldn't say it's a 0 to 1 innovation because there's already peer-to-peer lending and peer-to-pool lending available in the marketplace. But this certainly puts a new spin on things. Probably, in my mind at least, combines the best of both worlds, and gives that section of the market, like NFT lending and margin trading, just that much more attention. And if this is new and scary to you, it's your job to experiment and figure out how to profit from it, or how to protect your downside from it, right? And that doesn't mean go and put your life savings into farming loans. It just means figure it out, right?
Yep.
Which is totally an aside, but it just continues to baffle me that if you're to stick around in a crypto bear market, which is completely fucking miserable and is incredibly detrimental to your physical and mental health, that you would waste it like farming engagement and pretending to be an expert on things, and basically getting people to pay for your $80 a month Substack so that you can continue to live in your mom's basement rent free, instead of actually learning skills of how to trade and how to invest, or how to even just build a product. Then like I don't know what you're doing.
Jeez, are you talking to somebody in specific there? What that sounds like.
Feel like I'm subtweeting you or shading you, then yeah, I don't know, maybe you want to get yourself checked.
You're telling on yourself if you feel like this is against you.
Yeah, exactly. My thing, and just to reference, Grant and I talked about this briefly yesterday. My only question was, and I think it becomes a question of what the maturity level of the NFT market is, and whether or not there's the liquidity in the space to kind of like deal with this with this like really interesting thing in this time where there's not much liquidity in the space itself. Now, I think that looking back on it, when I thought about this, that's actually a really interesting idea to drop this in a bear market, because maybe people will get wrecked in the space and maybe floors will come down, but at least you have the chance to kind of like play it out before there's like massive amounts of liquidity pouring through, which, who knows, maybe massive amounts of liquidity never come back to NFTs, but let's assume they do. Eric, what is your take on this this whole thing? Like, where do you stand on the idea of Blend and kind of what it's bringing right now to the NFT market?
I think, I made my position pretty clear. Like, I think this is a really significant innovation, and it somebody had to do it. And I think injecting this sort of like fluid, dynamic, short-term leverage, similar to commercial paper facilities or auction, like any sort of like auction loan market is that doesn't require like an oracle, doesn't have necessarily set terms, and uses a market dynamic for pricing risk. It's good, and it helps the space. I think it like lives up to this whole idea of having just decentralized actors at play. But in the short term, people are absolutely going to get fucking wrecked, because there are going to be guys, and we can see this on the parsec dashboards, that say, hey, I get to buy an Azuki for 0.5 ETH down. What could go wrong? And you look under, and they're paying daily interest rates at of 3%, right? So those are like liquidations waiting to happen. In any sort of asset market, when you inject leverage, it is a sugar rush, right? And that's going to lead to a boost in price. But leverage and liquidity are not replacements for demand. And so at the end of the day, if we don't have real organic demand growth on the other end, we're just going to round trip harder, and people are going to lose money on the way down. And this also, like, you have to understand, right? Like, when there's a reason that lending protocols like Aave, there's a reason that lending protocols like NFT lending protocols like BendDAO or NFTFi, like they either have what are like set one size fits all lending parameters for risk, or they leave it up to the people to figure out, because underwriting risk is really, really difficult. So and that's that's the same thing with Blend, except now like you're outsourcing the risk underwriting to NFT degens, right?
Yeah.
Who are also incentivized by potential airdrop incentives. And so it's just it's in the short term, as we figure this out, it's going to lead to some like really messed up dynamics. But this absolutely had to happen. And I think if the Blur team didn't do it, someone else would have. And I like the way that they made this very composable. And I think a lot of innovation is going to be built on top of this, because in a sense, what they really implemented is very, very similar to what GMX implemented for decentralized perps. So what I do, my prediction, in the long run, is that this resets in any sort of like normal market or even the bull market. It generally speaking leads to a lot more demand for NFTs. It helps people make money, and over time it allows like new innovations, like lending, like sophisticated lending algorithmic lending vaults to be built on top of this. And it creates sort of what you need for like actual market makers and sophisticated lenders to come in and support the space. But in the short term, we're all going to be figuring this out. There are going to be some outright predatory dynamics. It's going to be PvPvP, where traders go against market makers, go against lenders, and like against each other. It's going to get really, really interesting. So like, just please be careful, right? Like, do not buy 5 CryptoPunks for 10 ETH down. Because it's 10 ETH down. Just leverage when used incorrectly is absolutely poison.
Can I have a follow up on that, because I'm curious about this. As somebody who really has very little desire to buy on leverage, and I know that probably that's stopping me from doing some things, but it also will stop me from being an idiot. In a world of like, what is a world in which you see a leverage world that you'd want to buy 5 CryptoPunks at 10 ETH down? Like, so is that an idea that like, okay, I'm gonna buy, if I'm a smart trader, I'm gonna buy 5 CryptoPunks at 10 ETH down. The idea is that I'm expecting a move up, and I'm gonna dump each of those CryptoPunks for whatever, half an ETH, and then for 10 ETH I can make 5 ETH on assets that were worth whatever 10 times that. Is that the basic idea?
You're effectively buying call options on CryptoPunk.
Right. Okay,
And
that makes sense.
Depending on the interest rate that you those loans are at, the duration of those options can vary. So there are absolute like situations where I think like things are skewed in favor of the buyer, because they can effectively buy a long duration call on the underlying asset for very little premium and very little, very low theta costs. And they can get away with it because right now the lending market is not that sophisticated and the buyers don't understand it. Like over time, this will get priced appropriately, but if you're buying like 5 CryptoPunks on leverage, like you're making a very simple bet. Like you're saying that CryptoPunk floors are going to increase, and that leverage, that amount of leverage is just going to give you innumerable upside.
Right. Have they figured out what they're going to do yet? Like, so I know Azuki, whether or not they have an airdrop coming at their June event, but maybe they do. If Azuki had an airdrop, would you buy the Azuki on with the 10 ETH down or whatever? Azuki is probably like 1.5 ETH down, right? You can buy an Azuki for 1.5 ETH down. Do you get to, if the airdrop happens when you're holding it, it's your Azuki, so you get the airdrop and then you could dump it immediately? Is that how it could work?
If you are able to pay off the loan of the asset in question, there will be some type of flash claim function or delegate.cash equivalent for you to be able to do that. But it's not as if you can arbitrage that instantly, because you're not technically in ownership of that asset. Okay. And that's reflected on the chain as well. Just because you paid 2 ETH for it doesn't mean it's in your wallet.
Right. That's right. Because it all exists within the Blur ecosystem. You don't take it and hold on to it, because obviously then you could trade it out and suddenly it's gone, right? So yeah, okay, that makes sense. Oh, that's fascinating. Salty, as somebody who comes from the DeFi world and is watching this, what is your take on what this is going to feel like in NFTs? Do you feel like it's time for this?
I don't know enough about Blend to know how it totally differs from the myriad of other lending options out there for NFTs. But I mean, it's great to see because it seems to me that you need to be able to short markets. You need to be able to access equity in the assets you have. Those are like minimal building blocks for like a functional economy. So, there was a time where all you could do was buy and hold spot, i.e., just buy the NFT. Oh, and we have
Mhm.
perps now too. So the fact that we have all these things is just, I mean, it's great. It will make the market more efficient. And then we see people who are shocked that when the market becomes efficient, what their artwork is actually worth,
Or also the interesting thing is, and I think this is going to be something interesting, is like, did all of the NFT, especially the 2021, early 2022 bull cycle, come from the fact there wasn't an efficient market, right? Did we see these peaks go so big because we didn't have all this other stuff, all this stuff that was built into the financial markets? I mean, I'm assuming that's partly the case, correct?
Dude, I think that's a big case of it because, like when you look at shit coins, like there's really only two options. I think is like you're a pro, and by that I mean you're an MEV machine, or you're a TA machine, or you're getting like inside knowledge, or you
Hmm.
get lucky. Like that's kind of it.
Yeah.
Um, and I'm not a pro, and I don't do that well on shit coins, but I did quite well on NFTs. And I think it's because, yes, it was such a grossly inefficient market for so long that like really allowed us non-professional, machines to get lucky much more frequently.
Interesting. Interesting.
Be curious, Eric or Grant, if y'all, have
Yeah,
other
yeah.
takes
Do you
on
have a
that.
thought?
I think it just pushes up the volatility meter up a lot under the right conditions, and then in times like these, it probably just acts as a hedge and dampens the volatility a little bit. I mean, it opens the door in theory for more sophisticated actors to come in. Because it just doesn't make sense to play with the size that most people are playing with, without this type of margin or hedging in place. So yeah, if you're someone from the past cycle who hasn't learned anything and who has unfortunately served up as my prior example of deciding to be an entertainer instead of building something or learning real skills, then you haven't leveled up, and the curve has. So that's on you, really.
Yep. Interesting. All right. Why don't we wrap up? Let's wrap up with our what we're looking forward to this week. I'll start. I'm looking forward to the Turbo token going to 1.5 to 2.5 billion dollar market cap, y'all. Like that's where it's
That's
going
not
to the
like
moon.
financial advice.
We're going to the moon. That is not financial advice, and that was a joke.
Buy in Turbo now. Oh my gosh. Okay, Fonky, we got to talk about this real quick. That Fonky posts Dex Tools links, not Dex Screener.
Okay,
What are you
I want to have
doing,
this
man?
I want to have this conversation here too. I spent a lot of time in shitcoins. I've done a lot of shitcoining stuff. I still prefer Dex Tools to Dex Screener links, and I will tell you why. Here's why. When you go to Dex Screener on mobile, and I do a lot of mobile stuff, often I hate the fact that you have to bring up the chart in order to see it. This is the dumbest, smallest thing. But when you go to Dex Tools, you can see the chart right away. And on Dex Screener, you have to like click a little button to kind of bring the chart up. You just see all the details. So I appreciate that better. I also just got used to Dex Tools. Like I think I've just been there enough that it feels comfortable to me. But I'm more than happy to hear from people here why they think Dex Screener is better. What is the benefit other than a personal choice? Anybody? That's what I
It's
thought.
what the cool kids
That's what
use.
I thought. That's what I thought. That's what I
Oh,
thought.
I mean, for me, it's much, it's just much cleaner, much faster, and I think
It is faster. It is faster. I will say that, and it loads things better. I just think it's one of those things where I've worn enough grooves in my head that it looks Dex Screener looks weird to me. Dex Tools looks right. So I know
You
that
tried. Y'all should try this one. I just found it today called defined.fi. It's
a lot of
much
Ds.
nicer on mobile. It's like because it gives you these summary charts like bam right there. But I don't know them. It's not a plug for them. Maybe it's all a scam. But Defined thought looked pretty good on mobile.
By the way, Defined, come sponsor the Midcurve podcast. We're probably speaking to people that you would want to have in your ears. So feel free to come sponsor us. What about Salty? What are you looking forward to this week? What are you checking out? It's one of those weeks, huh?
I mean, you didn't ask us what our word for the week was at the beginning.
No, I skipped it. Turbo was too exciting.
Yeah, I think we'd all have something meme coin or something related to say, but I don't know, man. I'm looking forward to going to bed and missing more like 10 or 100 X's and trying to tell myself it's okay because I try to own cash flow assets instead, like Curve and Aura and Balancer and GMX. So
Yeah,
cope.
fair enough.
Cope this week.
Grant, what about you? Anything you're looking forward to?
Yeah, I just there's dunes and other dashboards out there that'll tell you how much gross lending activity is out there. It seems like day one, Blend has already provided like a much needed boost to lending volumes for NFTs on ETH-L1, and I'm excited to see which, I guess I'll say, ancillary products come out on top of this, because there have been some really good ones, like and not invested in any of them, so take the free advertising, but like MetaStreet, Wasabi, NFT Perp, like these are all products that have been out for like not over a year, but definitely over 6 months, right? And they just haven't reached traction. Like I don't think any of them had 5,000 unique users up until they don't have 5,000 unique users, and something like Blend that brings the concept to the forefront is surely going to help at least some of them. So yeah, I want to see which of these guys on the fringe kind of went out and could make for some good farming opportunities or investment opportunities. We'll see.
Great. Eric, what about you? What are you looking forward to?
Yeah, kind of similar along the lines of Grant. Obviously FOMC is tomorrow. I sort of want to see what the
FOMC. You said FOMC. There we go. Now I got it. FOMC.
I want to see what the commentary looks like there. I think this is gonna be this Blend is gonna be really fun. There's gonna be a lot of gaps to exploit. And I'm interested in seeing just like the space as a whole better understand leverage and risk underwriting. I think like you get this shit out of the way now in a bear market, so that like when the bull comes, it's just fewer people wreck themselves.
Great.
Yeah.
Okay. Well, that's it for everybody. Thanks for joining us again this week. Hopefully, we're on a regular schedule and we can kind of stick to this timeline. But hope everybody has a good week, and we will see y'all next week. Thanks, everyone.